sometimes the business owners, they don't want to pay taxes. But if you buy equipment or you buy a fancy new SUV, then suddenly the SUV is going to depreciate, lose 50% in the next 3 years. While the other way, yeah, you pay 30% in taxes, but you still have 70% of liquidity for whatever you want to do.
Welcome to the Empower to Grow show, where we provide valuable insights to help your business thrive. I'm Kelly Brosna, the CEO and State Director of the New Jersey Small Business Development Center Network. And today, we are excited to welcome Victor Garrido. He is the founder and managing partner of GG CPA Services. And Victor has extensive experience in taxation, small business accounting, and tax planning. And he was recently recognized among Forbes' top 200 CPAs with a remarkable background that spans international experience and community advocacy. Victor is here to share his invaluable insights as we approach tax season. Welcome, Victor, to the Empower to Grow show. We're really happy to have you here today.
Thank you for having me.
So you have a little bit of a history with us, and you've done some workshops for us in the past, but what I'd like the audience to know is, talk to us a little bit about you and how you came from Madrid, Spain, all the way to New Jersey, and you started GG CPA Services, is that correct?
Yes, that's correct. So, yes, I was born in Madrid, Spain. Probably you hear from my accent. But I worked in PricewaterhouseCoopers in Europe for 4 years. And then from there, they shipped me to PwC New York, where I met my wife. My wife is from New Jersey. So then I ended up here. So after working for almost a decade in PwC, then I decided to open my own shop and provide accounting, tax, and other CPA services.
Well, that's perfect timing because here with the SBDC, it's all about the entrepreneurship. So you doing some training for us is actually a great representation of how you can be an employee to your own owner and then come and actually provide resources to the business community. So timing is really, really great. We're getting ready for people to really be starting to think about tax season. So let's talk a little bit about your CPA firm and how you help businesses or maybe recommend businesses. What should they be thinking about right now?
So we are, as you mentioned, versus the end of the year, we have a month and a half. So we are meeting with all our accounting and bookkeeping clients to know the numbers. So what are the numbers going to look like? What is the tax projection that it might be owing taxes or not? And what should be, maybe they'll be buying equipment, maybe they should be investing in advertising just to lower that net income. So there are several options that we can do before year end. So then hopefully the tax bill is not a surprise to us.
So the businesses that you work with, what is the typical size that you work with?
So we go from mom and pops, could be 300, 400,000 in revenue, up to $50 million in revenue, what is considered a small business for federal standards, which is, I suppose, 20, 30, 40 million in revenue is not so much a small business.
And again, we go after sort of 500 or less employees, right? Yep. So that's just about everybody here in New Jersey. So what is the one thing that you think that businesses should maybe hone in on of really thinking about? You mentioned about maybe doing some investment to lower the on the spreadsheets, the look of profits, right? So then they would pay less taxes. What are the other sort of maybe tips or tricks that people could think about before? I mean, you mentioned it's a short period of time, but they need to start really honing in on this now.
So we get a lot of consultations on people that maybe they don't have the right structure. You can go from an LLC sometimes to an S corporation, giving an officer's salary, and that would be a great way to reduce taxation, but not reduce the income received because the parent.
And as long as it's within the same calendar year, they can do that?
Yes, so you can request the retroactive. So here in New Jersey, you will have to file the 2553 form with the IRS, and then you will have to file also with New Jersey S corporation election. And then Also, you have in New Jersey, which is great, and not that many business owners know, the New Jersey PTE, the pass-through entity, that your business can pay your state taxes on the income of the company, and then you can save that. So let's talk about numbers. Let's suppose my business makes $1 million in revenue, and I owe 10% at the state level, right, $100,000. So if the business pays that $100,000 through the PTA or New Jersey-based program, suddenly my federal income is no longer $1 million, it's $900,000. So I will save 37. Let's suppose my personal tax bracket in the pass-through is 37%. I save $37,000 just having my business pay for the taxes. So that's something that is happening more and more with businesses, small businesses especially. It's up to 36 states that allow this.
And are there benefits for businesses, tax purpose-wise, to be women-owned, minority-owned, in an enterprise zone, an opportunity zone? So any of those, does that feed in to help the businesses as well? So
that impacts taxation, as you mentioned. I think you are really good at advising on certifications and everything. We see for our business owners, if they are minority, women-owned, veterans, sometimes they get access to financing or opportunities at the state and local level, because sometimes they are funding reserved for minorities, right? So they will be able to get grants, or they get projects, or like something that it will be. The second point that you mentioned with the opportunity zone, sometimes like sales tax is lower, or there's like certain discounts on real estate, or depends on the opportunity zone. Sometimes you make investment, you don't have to pay capital gains. So there are a lot of, the tax code keeps changing, and it's thousands and thousands of pages. So you just need to tailor your advice to whoever tax professional you're working, just triple check if something might be applicable to you.
So, and as a business, a startup, let's just say, because not everybody has a CPA to guide them through this, what would you say for them to look for? Somebody that is very knowledgeable on tax purposes? I know CPAs, work with businesses on that, but what if a business doesn't have a CPA? What do they do?
So I think there are organizations like NJSBDC that can give training. I think your library is amazing with hundreds of videos just on different topics. We highly recommend working with a CPA, enroll agent, or other tax professional that maybe has been recommended by other business owners, chambers of commerce, or things like that. I think until a certain point you can do it yourself, but once you grow to a certain level, the tax savings are going to be higher than the cost. You can always have consultations. You can call 2 or 3 CPAs or enroll agents or other professionals and see what they recommended and what value they can provide for your business.
So, and again, we always recommend people that are starting, and you're right, like a sole proprietor may not at that point in time need, as they're just starting and kicking off, but is there a certain income level that you think recommendations, because obviously this is all recommendations here, right? Mm-hmm. Once they reach a certain part, what is the timing on going from a sole proprietor to perhaps thinking about going to LLC? I know you mentioned there are tax benefits of doing even LLC to a C Corp, right? Or something along those lines. Yeah. So what is the right timing, for a business to consider that?
So I would say that is when they feel a pain point. Suddenly the taxes become too burdensome, right? Too high. It's oh, I'm paying so much in taxes that 40%, 50% of what I'm making is getting out of the net, right? Because if you add the tax bracket plus the 15% of self-employment tax, it could be 30, 40% in certain cases that will get out of your pocket. So usually clients move, at least in my experience, when they have a pain point. When there's something that is okay, I cannot keep doing this, either I don't know what is going on with my books, or if I spend more time doing my day-to-day, visiting clients or selling products or services or whatever, I will be making more money. I feel once you're netting at least $100,000 to $150,000 of net, not revenue, but revenue minus expenses, the net, from that point, I think it's good to go to a tax professional. Just to check if there's anything else, or they can give you any advice or guidance on how to do things better.
And I think that's a great guideline, because people don't know, right? And our point is to try to help businesses and catch them before it's too late, right?
Yes.
And to get them, it's like we want people to plan. So you mentioned our library and our classes that we have. It is very important for people to think. We want people to leap, and entrepreneurship is an amazing thing. But we want people to plan that so that they don't lose their life savings. I'm going to go a little off script and just ask you a question, because there's a lot of special programs that are out there. You know, during the pandemic, that was the PPP and EIDL loans that were out there. The state of New Jersey, which I think was very, very phenomenal with offering a lot of different programs for people to try to keep them in business. The SBDC, we're working with those businesses to get them access to it. Now it's a time, okay, you got a grant, or you got an EIDL loan or a PPP loan. Make sure you do your forgiveness and all of that. But the grants, and there are still some programs that are out there. I used to always say, it's like, don't say that G word, right? Because it's like, there's no free money, you know, you're gonna pay for it one way or the other. But there was a lot of funds that were available in the form of grants or forgiveness. Talk to me a little bit about the businesses of how do they report that? And I think there's a misnomer that it's not just, you still have to report it. Is it considered revenue? Is it considered, you know, how do they think about that? Because when taxes come due, that you got to pay the man, right?
So it's a great point, and I think it's a really interesting subject, and depends on the grants and depends on what is going on. So PPP that happened 2-3 years ago, right, and it was based on the employees and the salary paid on W-2
Sure.
and similar, that was not really considered a grant for IRS purpose. It was a special program. So that one was not considered revenue. It was like an equity injection. Like
Okay.
if you put money into the business, it was not part of revenue. Other grants, the IRS is, you receive a grant, that is like revenue to your business. So we have to be careful, because some people believe that grant is just a synonym of like, I don't have to pay taxes. So that's not the case. And then you have to check also at the state level, because some grants maybe are non-taxable or might be taxable. So it's in a case-by-case scenario, and there has to be some research to be done. Some clients come to us and say, hey, you know, this grant is taxable. Should I take it? It's like, for sure. You're going to pay 20%, 30%. So
You're still
getting money, revenue. So I would rather keep 70 in my pocket than have nothing, right? 70% of that money. So I think that's the discussion. I think sometimes it's more difficult to navigate certain grants, and at that point it's better just to consult with a professional than not get penalties, fines, and everything that will be in the thousands of dollars.
So is the recommendation too, is that when there's availability of fund, and let's just say it's a grant, and we have partners that we work with, EDA, for example, does a lot with the state. They're a phenomenal organization, a good partner of ours, right? So if EDA is offering a grant for, let's just say, improvement of I know there was one that was out there for if you're renting or leasing, and it's a lease improvement grant. So should that business owner, you know, when they're talking with the EDA and the opportunity, should they be asking those questions like, is it taxable? Is it, so right up from the front so that there's no surprises, right?
I think the EDA does a really good job on their website just to list like the requirements. And we had a lot of business owners. I was also a mentor for the EDA when the pandemic happened, and we were helping a lot of people. But they are really good at mentioning who might apply, what the requirements are, and kind of like what you need to do once you get it, right? Like they open to everyone, and then they will communicate. But yeah, you can ask and say, hey, is this taxable or not? Or check with your CPA or whatever. But I think they do a really good job on disclosing that information. Sometimes it might be very more like later on in the paragraph.
The fine print.
But I think they usually do a really good job, because at the end of the day, these are government funding. So last thing that they want is get in trouble. So they usually do a really good job.
No, I think that's really important for business to wear, because it's great to know that there are grants that are available to them, but there's also, I won't say consequences, but you need to know what you're getting into. And again, and we talk about this with planning. We recommend to make sure that people have a business plan,
Yes.
that they do their forecasting and their financials. So as you're working with businesses, speaking of financials, as you're working with businesses, do you recommend a minimal of 3-year projections? You know, what is your sort of rule of thumb that people should be thinking? And I know, listen, the terrain changes constantly, right? You never know, and we'll talk a little bit about the election and what that means to the business community. But terrain is constantly changing, and there's always moving parts. So what is sort of the rule of thumb too? Because some banks want to see 5 years. Some banks want to see 3 years. What is sort of your rule of thumb that you suggest?
So I will say there are two groups that I will talk, like startups, when they have like 1 to 2 years of operation. So the business plan is extremely important. And what I tell all my clients that they need a business plan, especially starting on, is because they have to fill out like 10, 20 pages. If you're not already able to fill out 20 pages, then you don't have like...
You're not ready.
You're not ready to do it, right? Because you need to know who your competitors are, what the product or service, how it should be priced, you know, your location, all the information, and there are like great business plans available online that you can use. So that will be for a startup. Write the business plan, and keep in mind that you have to be flexible enough. When I started my company, I had a great business plan. Every 2 months, I feel like I had to change it. Because what I expected the client...
You didn't let it get on the shelf and dusty.
Yeah, so you have to change it, because where you think your clients are going to come from, maybe they will come from partnerships instead of you reaching out to the audience. So it depends on the group how your pricing is going to work. So keep in mind that the business plan is just a living document, as I would say. So that will be extremely important business plan for startups. Once you're in 2-3 years into the business, the bank, SBA, or any other organization to provide you finance, they are going to want to see your tax returns. If the company is making money, net income, or even in some cases, even if you're trying to buy a building or similar, what your rent is, right? Because once you don't pay rent, you can pay the mortgage if you're buying that. But they want to know what the business is doing. And so many times, we want to pay less taxes, but sometimes we need to know, hey, what are your objectives? Do you want to buy real estate, or do you want to buy a bigger equipment? So then sometimes you should be keeping that money aside, pay your whatever you need to pay on taxes, because otherwise you remove the opportunity to do business. I mean, there's a cost opportunity on anything. So I think for business with 3-4 years in existence, I think that's what they are going to focus on, the last 2, 3, 4, or 5 years of tax returns.
Okay, that sounds, and that's, again, we talk here rule of thumb. Everybody's a little bit different, and we also tell people, make sure you talk to your bank or your lender or whoever the financer is going to be, to make sure you're giving them what they would like to see. I want to touch on real quick about, there was a program that was called, what is it called? The Beneficial Ownership Interest. I want to make sure I got it right. Beneficial Owner Interest. Can we talk a little bit about that, and what does that mean to the business owner, and how can they take advantage of it?
So we have been working the whole 2024 with business owners and attending a lot of conferences and trainings. So what happened was in 2021, the Corporate Transparency Act was passed. And lately, how they pass legislation, they make it effective from 2024. So what they want to know, and it's a department of Treasury, like the IRS, the department that is going to be enforcing is the FinCEN, the Financial Crimes, I think it's Financial Crimes Network, the same one that they do the FBAR, the foreign accounts, the same one that they do the $10,000 when you deposit. They can, like in a bank account, they can get a flag, right, if you deposit more than 10,000. So it's the same department. What they want to know is who is the owner or beneficial, they call it beneficial owner, but who is behind that entity. So what they are trying to do against money laundering and any other false or fraudulent transaction is to know who is behind that entity. And you have to register either online or by paper. But if you don't do it, there's going to be a fine of $591 per day. So if your entity, and I will summarize as much as I can, because this might be a complicated topic. If you had an entity before 1/1/24, you have until 12/31/24 to register the company.
Okay.
So it was before 24, you had the whole year, this year to register.
This is federal.
This is at the federal level.
Federal,
There's a BOI FinCEN, and then there's a link, and then you can fill out there the paperwork. And I think in our seminars that we have done together, there was a special part that we did in the past, just showing people how to file. So it's in your library. If you register a company in 2024, let's suppose I register a company today, I have 90 days to register in FinCEN, that company. And what you have to disclose is, let's suppose CPA Services is 100% owned by Victor Garrido. You just have to disclose. Anyone that has more than 25% ownership in the business or controls indirectly the business, right? You could have Victor Garrido, but truly who is benefiting from the company, someone else. You have to do it. And this is applicable to a lot of small businesses. There are a few exemptions, but usually a small business, they will have to register in order to avoid that huge fine per day.
And again, you said $591 per day.
Exactly.
That they're not. So, all right, just to make sure I understand, anybody who started their business January 1 of 24 has until the end of the year to get that registration put in there. If you register now, you have 90 days. So new entity. So if you're in business, you have until the end of the year, basically.
So if you were in business before the year 24, yes.
Okay.
And then you have a special period, and then from 2025, it will be 30 days. So they are giving a little more room for people registering in 2024, going forward, any changes, any updates. Let's suppose I bring a partner, or I change my driving license, or similar information that is reported on the BOI form, you will have 30 days just to make updates or changes.
So that's huge, and we want to make sure that people understand that, because that could put a business out of business.
It's
especially with $591 a day, and you don't realize that, times it by a whole year, wow.
If you multiply by 365, it's around $130,000, $140,000, I believe.
That's crazy. When we first were talking about it, I was like, $591, not a big deal, but I didn't realize per day. So yes, all right. So please, audience, make sure you get your business registered. Now, just shifting topics, because we had an election.
Yes.
And there's some taxes we need to talk about, because originally there was some tax relief that was going to sunset. Let's talk a little bit about what that means now that the election is done and President Trump is coming in. It was his tax reform or tax relief.
Cuts and Jobs Act, yes, in 2017.
So the assumption is what? The assumption is going to continue, right?
So we are assuming, and the Trump's program, economic program and tax program, he wanted to keep the changes that he did from 2018, as you mentioned, to 2025. And in 2025, we're supposed to sunset, but we expect that all the QBID, all that 20% reduction, and other factors that they are going to extend. What we have been hearing is maybe even make it permanent. But we are expecting that, those tax changes are going to continue going forward on the tax code.
And it's going to be important, because I'm sure businesses were probably planning for its sunsetting, and now they can continue as is. So if they've been in business, they continue with basically filing the same way that they've been filing and all of that. Is that right?
Yes, so you will still get tax benefits that were applicable only from 2018 to 2025. There were some changes that maybe at the individual level were not as beneficial, like the cap on the state and local tax to $10,000. But overall, on the business side, it was quite positive, because for many business owners, especially the smaller side, you have a 20% deduction in addition to whatever you were making.
Okay. So as we wrap up, and I could talk to you all day here as we're wrapping up, because I think this is so important, because, again, I mentioned before, all of our discussion points could make or break these businesses. And our goal is to make sure that we're providing resources to the businesses to be successful. So as we sort of wind down our conversation, what is the last sort of worded advice that you would give businesses as they're thinking about going into 25, right? What should they be thinking about? What should they be putting in place right now? Your advice with your plethora of experience that you've had and all that you've been doing for the business community. What would you recommend businesses to do right now?
So number one, take care of the BOI. I don't want any of my business clients to pay $591. Second, there's still time before year end, so there's a month or something like that. So tax planning is extremely important. We have been changing the structure for many of our clients, considering if they want more finance, maybe don't make additional expenses.
To lower that
net income, that profit. And sometimes the business owners, they don't want to pay taxes. But if you buy equipment or you buy a fancy new SUV, then suddenly the SUV is going to depreciate, lose 50% in the next 3 years. While the other way, you pay 30% in taxes, but you still have 70% of liquidity for whatever you want to do. So case by case, know if it's worth it to invest more. And I like invest, not spend. Invest on the company versus maybe keep the liquidity. Because there's still time. And then start thinking about closing the books, releasing the 1099s at the end of January, and a few other items, retirement and things that can be done next year. But I think it's going to be really interesting, especially with now Trump being the president, that hopefully we get to continue some of those tax benefits.
Gotcha. Well, this has been great. I appreciate your time. And again, Victor, thank you for donating your time to also do our webinars for us on the tax purposes. This information is going to be, I think, crucial for the small business community, especially for going into 25 and preparing. So, Victor, thank you so much for your time.
Thank you, Kelly.
Okay. Thank you all for tuning in to the Empower to Grow show. And stay tuned for more expert discussions in our upcoming episodes. Have a great day.